This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with your closing grain and livestock comments for July 2nd, 2018. Corn market on the day down 11 to 12 3/4. Soybeans down 10. Chicago wheat down 19 to 21. Minneapolis wheat down 8 to 9. Kansas City down 17 to 21. The washout continues in the grains. We continue to look at new lows now for the corn market. Soybeans not quite down there yet, but Chicago, Kansas City wheat pressing in new lows. Minneapolis wheat as well. So the washout continues. You can chalk this up to concerns over Mexico's election. The concern that as we look to the new year 2019, that Trump and the new Mexico president may butt some heads over trade deals. We've got the uncertainty looming this week over the trade tariffs that could go into effect, $34 billion worth with the Chinese. So a lot of uncertainty in the marketplace. Indicators, while they're oversold, it's just kind of the guessing game as to where the bottom may fall. And now we're doing this all over a holiday weekend where trade's a little lighter to begin with. So a lot of dynamics, a lot of emotion. We do look for the markets to try to correct down here. We've talked about this 360 mark in corn, which unfortunately we closed below today, but that consecutive day, whether what we do tomorrow, is going to be of importance. If we can come back up, at least you solidify around this 360. The bean market around 860, I feel, is the most vulnerable with the trade news this week. What I mean by that is if the tariffs go into effect, we could see beans break down. If they don't, that's where we could see beans accelerate a little bit. And the wheat market kind of continues to deal with these world stats. So a lot of information floated around. This is a risk-off, get-me-out, Chicken Little type environment right now, and it's tough to put too much emphasis on common sense when you've got a market that's washing out. So where the funds wash out to, that's always a million-dollar question, but I would expect another pop higher here before we get into kind of that harvest washout. So we'll need to kind of be ready and willing and able to watch for that. On the feeder cattle side of things, up 60 to 232.5. Live cattle up 17 to down 17. Hog market down 120 to 207.5. Cattle market performing relatively well. We've got good base support around that market. We've got a market that's trying to extend and successful in doing so. So we'll continue to watch that as feeder cattle press above 150, as this live cattle approaches some of these key 109 counts off that August board, a couple dollars away yet, but some good momentum there, good chart formations, and I think good overall demand, both export and domestically, where tariffs don't impact it. The hog market tied just as well into the tariffs, so when you watch the fallout in the grains, you can tie hogs right to this washout, and that's why we've seen the hog market come down here as well. So we'll watch for details. Look for that hog market to press into new lows. We've got a gap lower, the cattle market firming. This has been Jim Emter, Van Ahn Company, Alexandria. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon.